So we've had a nice run this year in the stock market, and when you combine that with last year's Q4 run, it's been a heck of a run. So the question is the market overextended? That's what we're going to dive into. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. Starting out on the S&P 500, let's take a look at what's going on. We are definitely in an up channel trend, which is good. Higher highs and higher lows over a longer period of time. And the market did break out of its all-time high. And so this red line here signifies the previous high of the market that was set back in 2022. The very beginning, and so if the market, or should I say when the market decides to pull back, that would be a very natural spot for it to find support, where buyers would come back in and begin to pick stocks back up. So we're a little extended up here. We are seeing the momentum starting to fade in the RSI, as well as the MACD down here a little bit. So but you can't double guess it at this point. It's still, RSI is still above 50. MACD is still positive. It's just kind of floating along right now. Now I've got this real unique line that's kind of got a very steep trajectory up right here. You can see this kind of black dotted line here, and that's just showing you that the market is really climbing a steep mountain right now. And so we know long term that's not sustainable. You can't have something that just goes straight up and without getting pulled back a little bit. So we've had some very minor pullbacks along the way, but in those minor pullbacks so far this year, and really the Q4 of last year, the RSI has stayed positive, and you've seen the MACD stay above zero as well. So everything at this point technically looks good. So you wouldn't look at this chart and say, oh gosh, we're overextended, we need to pull back. But there are some ideas that may suggest that we are overextended and due for a small pullback here. So we're watching that very closely. All right, let's take a quick look at the NASDAQ. The NASDAQ is more of a tech-friendly, a little bit more concentrated index. So it's got 100 positions, primarily in the high-tech space. It's the same top 10 stocks as the S&P 500, but to a greater degree, where the S&P 500 the top 10 stocks might compose nearly a third of the overall performance of the S&P. Within the NASDAQ, those same exact 10 holdings comprise a much greater percentage, well over 50, close to 55%. So, it's just interesting to take a look at those relationships sometimes. And we do a lot of that kind of relative performance type analysis here at Cannon. But if you look at the NASDAQ, it's also broken out to new highs, I would say to a much greater degree. And if you look at the prior kind of breakout, so we had this downtrend that occurred through 2022, and then 2023, you saw it break that trend and really start to head upwards. In the same time it was doing that, you started to see this positive momentum occurring within the MACD, which is why that we really look for divergences. This would be a positive divergence, where essentially the market's still heading down, but you're seeing the MACD start to make higher highs and higher lows, and you're also seeing that with the RSI up here. So so just like we have a positive divergence, where essentially it's kind of foretelling that the market's going to be heading up and it has momentum behind it. Again, we're watching this closely, but you're starting to see the momentum fade a little bit here. So you're seeing the RSI create a little bit higher, lower highs, while the market's making higher highs. And then you're seeing the MACD, not a huge divergence here. It's kind of a sideways deal, but again, just watching the momentum fade a little bit is something we're watching very closely. And when we take a look at the VIX, which is an indication of the fear in the market, it is remaining low, which is good. So as the market is continuing to climb this mountain, the VIX is staying low, right? Which kind of makes sense. When the market's going up, people feel favorable, and the fear starts to subside. So those are kind of natural deals. But we want to just make sure that this doesn't pop up and this pops down. So again, that's one of the indicators that we watch very closely. So in wrapping up, I think you can see that we are probably a little overextended and due for a pullback. We don't know to what degree a pullback would look like at this point. But there is no doubt we've had a nice run, and we're starting to see some signs of exhaustion in the market. So, but the reality is, this is why we use technical analysis, is so that we take the emotion out of the trade. If the trend is heading up, let's not let our emotional biases prevent us from being in that trade. So, while it's going up, we got to be in it and look for signs of a rollover. And right now, we're not seeing it quite yet, but there are some, let's say, cracks in the dam. So we're watching it closely. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.